following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Brent in Martinez, California. Hey, Brent, what's going on?
How you doing today, Tom?
I'm doing great, man. You having a good day out there?
I am, thank you. I was really just commenting on the fact that I'm really enjoying the new format with you being there when the market's still open. You've assembled a great group of people. They're all great technicians. I'm just so glad that I first talked to you on the radio with your little tiger growl. I'm like, who is this guy? And it got my attention, and it's really made a positive change in my life.
You're awesome, man. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote's by Walt Anderson. Believe in something big. Your life is worth a noble motive. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We have the Dow Industrials down 126, NASDAQ off 47, S&P's off 19, gold contract flat at $1,233 an ounce, silver up 51 cents at $17.07. Silver finally has some action, folks. We got the wide price spread. You get the juice in it today. It got a little pick-me-up happening. Bonds. The ever-ready bond market, folks, is phenomenal. You got the 10-year up 9 ticks right now, trading at 129.11. 30-year is up 6 ticks at 148.20. Refuses to back off. You're going to see much higher price, lower yield. Oil can't handle higher price. Oil right now is down 41 cents, trading at $46.35 a barrel. Bottom line, oil's going to make a run down into this 2008 low, which is the $32 level. Mind blower, no doubt. King dollar up 311 ticks, trading at 92.49. King dollar has been trying to get up and over this 92.53 area. Failed last week on price and volume. And it's really not a failure also, because what you have is this. King dollar took 9 years, 2 months to get back up to test that 2005 high. Did it. Backing off right now. I expect that back off is going to continue. Euro is down 69, trading at 117. You got the yen off 63 at 117. Interesting. They're both at 117. At 117.71. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. Oh, it's nasty out here, folks. It is nasty. If we start with the SPY, what you're going to see is this. The SPY had a high out here today of 204.66. You had the Dow Industrials. They were up 300 points to 280. They're down 132 right now. The bear has claws in a big way. What we're going to see here coming into the close is something that we hadn't seen quite a while. This leg down, when the SPY folks took out 201.92, which was taken out about 45 minutes ago. Bottom line, I suspect, number one, the low is going to get hit out here. The SPX right now is trading out at 2019. That baby is going to get sold off coming into the close. We go take a look at the Dow Industrials. What we have with the Dow Industrials is pretty dramatic. If you like looking at the Dow. Bottom line, you had a high out here today that was generated out here at 17,881. Right now, it's trading at 17,511, but that baby's not going to stop, folks. You can get down to 17,000. Yeah, this is pretty sick. I mean, 17,445 is game in a heartbeat. That's nothing. What we got, let's see. You get 50 minutes. 50 minutes is a long time on a market that is this week. Gold contract. Let's go over to the gold contract. What we have with gold is this. Gold contract out here today, we have done, okay, so let me get this on a daily versus a 10-minute chart. Okay, so we put this on a daily, and what you have is this. Gold out here today got to a price point up here of $1244.50. Right now, you're at 12.33. You're pushing into that swing point. The swing point that we're talking about is the swing coming back into the December 10th, and you have the volume behind the move. XAU, the HUI. Now, this is a phenomenon. This is pretty cool, actually. XAU and the HUI and some of these gold stocks have not been able to hold price. However, what you have is this. They've pushed into their higher swing points with volume. When you push into a higher swing point with volume and you don't hold price, you back down slightly and you go right back up there. XAU out here, the high in the XAU today, 79.94. Right now you're trading at 74.84. Bottom line, XAU wants to make a run all the way up to this 91 area. Pretty intense, actually. And who knows what's out there, folks, but there's something nasty that is out there because this market is nasty for the bulls. HUI, Gold Bugs Index. What do the Gold Bugs Index do? Gold Bugs Index runs up to 196.60 today. You're at 184 right now. Same type of setup. Gets into the higher price. Has the juice behind it. Bottom line, that little baby wants to, wants to also run up into the 220 area. Big number. Bonds. Now, the bond market, folks, is just phenomenal. When you take a look at this bond market, what you're going to see out here is this. The bond market right now is trading at 129.11. If we take a look at this and I'll put this on the TLT so you can see the 20-year bond plus. The TLT right now is at 132.27. We bring this back. We'll put this on a monthly basis for you, so you can see what this is doing and what it's basically has done. The July of 2012 high, that high up there was 132.22. We're getting up and over that high today. And if we do take a look at this in the aspect of what kind of juice we have, last time we were up there, you had 18 million shares. We're going to need more shares. Right now, you're at 6.7 million. You know, so what we have here is that we'll see whether that can get the rest of the juice into it to basically get up and over that level. What we do have, now this is where this gets really wild. What we will have, it looks to me like in spades, is that you're going to take out the monthly of the 2012 with volume. The monthly, we're dealing with 131 million. And right now, I'll bring this up so you can see how this is shaking out. Let me bring it back. Yeah. Bottom line is that you have, let's see, the 10th. Yeah, this is going to be real close as to where we get the juice. 78. Yeah, the way we're set up right now, folks, is that we're set up that would do about 150 million in the TLT. Getting over that swing point. So you get that baby going, you're going to have some real juice. Now, King Dollar. Let's go over to King Dollar. Why King Dollar? Well, King Dollar, folks, is crucial in the whole aspect of what we're talking about here. And this is why. The market, for some reason, cannot stand King Dollar not staying at highs. Bottom line, when we take a look at this, whoops. What we're looking at is this. We're trading out at 92.50 right now. And it's the 92.53 that you want to see this. Well, if you're a bear, you'd want to see, I want to see this close underneath that today. What you have is this. The actual high in this contract is 92.63. That was hit on the 13th. No, 13th, hold it. What day we got right here? 1 second. It's pretty bad. I don't even know what date it is. Is that 13th today? Yeah, so that was hit this morning. Sorry. That was hit this morning. It gave it up on price. Had light volume up there. It's trying to get up into the 92.53 once again. The 92.53 is the high that was generated in 2005. And that's the number that I want to say, basically see this baby stay under. Some of the higher volume stocks out here, KBH. If you want to see KBH, this is KB Home Builders. This little baby is getting toasted and roasted out here. And we pull this back. You put this on a daily. And what you're going to see, this has gone from $17 down to $13.65. We put this on a monthly rather. And on a monthly, what you're going to see is that she's going to be basically coming down. She's at $13.64 right now. She's going to get down and be testing this $13.11 area. Bottom line, we'll go back to the S&Ps for a second. This is what you have happening. We're talking about this October 15th swing low. The October 15th swing low, folks, is game in spades. That level on the SPY is ringing out.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom TFNN.com takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You get the Dow down 65, Nasdaq off 16, S&Ps are off 17. And as we do each and every Tuesday at 20 past the first hour, we get our man, Mr. Basil Chapman. And don't forget, folks, at TFNN, we do 10 hours of live programming every trading day. Starts at 8 o'clock in the morning, we go 8 to 6 at night. Then we take that and replay it. All live, though, 8 to 6. Our man, Mr. Basil Chapman, got an outstanding show each and every trading day from 11 to 12 Eastern Standard Time. Also has a great newsletter. It's the opening call. The way you test drive it, come over to our website at TFNN, go into newsletters, go into trading newsletters, see the opening call right there. Basil Chapman, what's going on?
Hi, Tom. How are you?
Doing great. You having a good day? Staying warm?
So far, not bad.
Yeah?
It looked very good early on because we managed to grab the 300% long UDOW, which is 300% on the Dow. After my newsletter went out at about 8:35 at a very good price. And, of course, with the Dow up 300 points just a short while later, it looked fantastic. But we gave up those profits in that big turnaround. And, got to be suspicious here because although it looked like it was a KBH report, if the market is that vulnerable and it drags down a whole bunch of sectors at the same time, and not just that one sector, home building, then you have to say to yourself, wow, this is now becoming a far more vulnerable market. So the chart I'm showing you here, which I always show you, is of the Dow, and it shows that this arch formation, when it went from the 16th of December low of 17,067 up to the 26th high of 18,103, it made an arch formation. And then within that arch formation, it hit 17,262. That was on the 6th of January, and had a huge spike up to 17,916, pulled back sharply for 2 days. And then what happened is, earlier this morning, it went to a new recovery high at 17,923. Now, that dashed trend line here is one of the techniques I have in my CD book, which is called Introducing the Chapman Wave Methodology. And it's like an expanding wedge. I call it, it's like an axe formation. And when the price makes lower highs and much lower lows, when it gets back there and it's able to close above it, that is very important. So it was trading above it for just a short while, starts to pull back. And one of the things that I've been talking to you about, and one of the reasons why on the Dow I've been positive, expecting that there will be a new recovery high, is that at some point today we were only 200 points away from an all-time high. And that's at 18,104. And one of the reasons why I've been anticipating it, I'm going to expand this particular chart right here. You'll see this is the weekly chart, this one right here in the middle. And it shows you that the price has held the rising higher lows and the rising highs going to that peak C. And normally in the Chapman wave, you expect at least a D to come. It's still a possibility. It's just getting harder and harder. And basically what I want to see is by Friday, instead of breaking down and going underneath 17,262, the low of last week, I'd like to see the price trade nicely above this 9-period moving average of 17,667, maybe get to the 17,800s by Friday. That'll be a positive. It's getting harder and harder to do. And one of the things that I'm looking at is that within the sectors, I've been waiting to see when we got some kind of a sell-off that was fairly meaningful in the auto parts. And if you look at AZO, which is kind of the leader of the group, it's gone from the 627 all-time high that it made back in, I think it was the last day of December. Yeah, December the 31st. And today's low was down at 583. That's a pretty big move. But in my weekly charts, this is a little confusing to me. It isn't very often that I get this all-time high at a leg B. So I'm trying to put this whole package together. I see vulnerability and I see within the rotation certain pockets of strength. But of course, a day like today can shake your belief in anything going much higher. But I am looking to see how these different sectors pan out. If you look at the QQQ series, it hasn't been acting very well. And one of the reasons is stocks like Google, NASDAQ, these are the heavies of the Dow, are not acting very well at all. And we saw the, I think it was the IBB, yeah, the IBB, I did it during my show today to say that the IBB had been acting very well, and how it handles the next, I'd say the next week is going to be very important, because even within the weekly chart and the daily chart, the lettering that I have in the Chapman Wave says there should still be slightly higher highs to come. So I'm trying to put this whole package together. It's getting hard. It's almost as if it's perfect to be an intraday trader right now, because we've had, I think it's 1, 2, 3, 4, 5, 6, it's about 8 or 9 sessions in which we've had big triple-digit gains, and sometimes have been both up and down. In fact, if you remember yesterday, pre-market, the futures were up very sharply, and then that didn't happen during the day. It was down. So it's a mixed picture for my subscribers. I'm trying to handle it by we having very far fewer positions. I'm looking more towards the short side. But most importantly, today was a very important day. Today's close. Even now, if you look at the Dow, this candle that we're looking at is actually just outlining a low of, I think it's something around 17,498, and the high is all the way at 17,923. So we could even see a choppy range. I think this is a options expiration week, as long as we don't take out this dashed green line right here, and that would say that a close below 17,470 would be very negative, and then you've got that arch formation. So this is the first time that I had my bullish conviction about the Dow going slightly higher, just above 18,103 for that leg D in the weekly chart, somewhat shaken, but I still see enough internal strength to say it's a possibility, but it's getting harder. Now I was expecting that we would get a double-digit decline starting in the end of January, going into February. I can only say that if we break under 17,262, that would say, you're probably wrong. It's going to happen sooner than that.
You know, the way the market's trading, Basil, I mean, you know, you've been around for a long time. This is, you know, this is fast and furious, man. I mean,
this is, Tom, you know, you're absolutely 100% correct. Fast and furious, and the VIX is back in the 20s. So my reasoning here, I don't know if I can call it reasoning, hopefully it's reasoned, is that if the VIX is this high, then we should really be seeing selling continue into the low, and we should not have these big 300-point gains. This is just getting rid of the 300-point gain, is saying that there's still some internal strength. So this is a dangerous market.
Okay, when you know, I mean, I know you know my take is. My take is that these are, when you go back and forth 200 or 300 points and you can't hold highs, those are classic bear market rallies that give it up in 2 seconds.
That's saying that your support levels are starting to break down, correct?
Yeah. So it's going to be interesting watching this shakeout, there's no doubt.
Absolutely. So this is a time to be probably much lighter in the market if you only like to be long, and this is also the time, it's a good time to be looking at some short positions, because there are some stocks that have had huge moves and are looking quite vulnerable.
You have a great night, safe night. Of course, we look forward to the program tomorrow, Basil.
Thank you, Tom.
Thanks,
have
man.
a great evening.
Have a great one. Have a safe one. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Our phone number is 877-927-6648. You get the Dow down 88. NASDAQ off 34. S&Ps are off 14. You can expect selling right into this close, folks. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. EverBank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow Industrials are down 42, Nasdaq off 17, S&Ps are off 9.5. And folks, if you like to test drive my daily newsletter, this is the time to do it. Not only because of volatility, but we have a great special going on. Normally, you can test drive it for 2 weeks. You can test drive it for 1 full month. You have until this coming weekend to do this. When you test drive it, you get a copy of my book, The Art of Time in the Trade, Your Ultimate Trading Mastery System. That's an $88 value. You get that absolutely free. What you also get is I'm doing a workshop, a 1-hour workshop on the 21st of January, and I'm going to be talking about the bond market, gold market, and the S&Ps. And specifically what I'm going to be talking about is that what you're going to be looking for volume-wise inside these swing points to be a bull and or a bear. Bottom line, it's all free right on the front page of TFNN. Let's go to Ken in Kansas. Hey, Ken, what's going on?
Hey, Tom. Good to talk to you. Thanks for taking my call.
Absolutely, man. Thanks for calling. Thanks for holding. Appreciate it.
Welcome. I just started your gold report last week, and I may be in a little late on some of them. Are they all your recommendations still buys?
No. No,
Okay.
do not. Okay, so went out today. This is what ends up happening. This is good you said this. What happens, Ken, is that I will say that they're a buy if, in fact, they can still be bought, because you know that these stocks, like if we look at Harmony, Harmony just went from $180 to $280. Okay, no.
One of them I was going to ask you about.
Yeah, no. What's happened, folks, is that this run off the bottom is pretty extraordinary, but that's what happens in the first run off the bottom. That's what it comes down to. So if we just take a look at Harmony for a second, this is what I expect with Harmony, okay? Harmony, they're going to the swing points from August. So Harmony will probably run up to 304 first, okay? That's going to be 100% bounce, move. Then what you'll get after that, then you'll get a pullback somewhere into the 250 area again. You're just going to have to sit there and have some patience first. I can tell you, though, okay, so let me think this through for a second, because there's a couple out there right now. Let me just see something. There's a couple out there. We didn't buy any more today because we already own 5, folks. So it's like, okay, I'm not going to load people to the gills here. Okay, NGD wouldn't be ready. See, there's a couple. Let me look at AG for a second, because there's a couple that are really prime. So if you look at First Majestic, what First Majestic has done is this. First Majestic is into $7 today. It has volume today, and it can't hold price. So, I mean, if you're looking to get into something, First Majestic, if it can, you're at 649. If you can get a pullback to 641. See, the buy there would be like 551. The problem that I see right now trying to get into these, Ken, is that you're in at the end of probably, they're very close to some of these higher swing points, and I would wait for the pullback. That's how I trade these out.
Okay, well, I see I got an email in there now that I haven't had a chance to read. What do you think about SLV?
I like it. Oh, hey, I'm glad you just brought that up. I think SLV, the ones I was just looking for. Actually, one second. Let me bring this up, because I think that's exactly what I was looking for. Because there is a couple risk-reward here that's pretty good. So the SLV, yeah, this is nice. Okay, so check this out. And silver has finally got some action underneath it, folks. And this just happened today. So the SLV has volume of 13 million out here today. 1.3 million, rather. You're going into the swing, 13 million, rather. You're going into the swing point up here that had 15 million. Then it got to a higher high with 7 million. I like what's happening there. Let me go see SLW just for a second.
It went down a little bit.
No, SLW's happening, though, too. See, SLW, this is Silver Wheaton is SLW. Silver Wheaton's an ABC structure on the way up. So let me just see this for a second. So 1657's your A. You get 2186. So you get $5. Your C is 1872. So you get 2372. Yeah, you can see the reward versus the risk just isn't there right now. You're talking $1 higher, and the thing already just took off from $18. Do you know what I mean? So Patience. You need some patience right here. I'm sad but true, you know.
Okay, well, we'll stick with it for a while. You have a good one.
Okay, man. Have a great one. Have a safe one. Let's go over to this S&P. So the Dow right now is up 19 points. NASDAQ is up 4. S&Ps are flat. And so we go over that. We take a look at this E-mini. And I'm going to show you something on this E-mini. ESH5. Okay. So let's put this on the daily, because what you're going to see here, folks, is that you're going to see this is going to be a trader's paradise for quite a long time right now. The E-mini out here today has gone from a price point of 2051. We got down to 2001. Right now, you're trading at 20220. So check out what you have. Your expansion up here was decent too. On the 10-minute bar, we just did 80,000 contracts. The 80,000 contracts, however, were going into 126,000 contracts. That doesn't mean a thing, folks. Zero. And there's still plenty of time to sell this right off again. This is a classic bear market deal. Depending on, you know, how many markets you've seen, the way that these numbers are hitting are classic. Now, what you can get is this. This couldn't even, right now, we're at 219.50, and if this can't hold, oh, this is going to be a classic, actually, because check this out. You're only 1 minute into this bar. I happen to use 10-minute bars. So here's the parameters. The parameter is if you close right here, 119. Okay, we're at 219.50. You need to close in 9 minutes of 219. Yes, I'm bisecting and dissecting it, okay, but I just want to show you how this thing works. So if you close at 219 in 7 minutes, what you'll see is that you'll see another run down into this 2013 level. That's your bearish, well, the bearish scenario is out there because we also have a high volume low that's spiking out, that has spiked out there at 2001. So the 2001 is going to come back into existence. You get a little bit higher, and what it's going to need volume-wise, you're going to need a follow-through with 77,000 contracts. When, excuse me, folks, when the first expansion up had that 80,000. When you get an expansion up off the lows, you got to expect that. As you're trading these, okay, what you want to be doing with fast markets like this, folks, okay, you don't want to be closing positions out. What you do want to be doing is that you bring your stops down, because just as we were coming into one of the swing lows that were generated out here from yesterday, bottom line, it blows it apart without a bounce. That phenomena happens in bear markets. That's how it shakes out. And it's not that it's going to happen every day, but what you're going to have, instead of closing a position out thinking that, okay, you know, this is coming down, we have some juice, I made plenty of bread. Bottom line, folks, is always the elevator on the way down is fast and furious, okay? And it always goes much further than you expect, even when you are a bear. Now, let's go over to the XLF. Why the XLF? XLF, because you're going to have Morgan Stanley, you're going to have JP Morgan. I believe both of them are coming out tomorrow morning. Let me see. So you have JP Morgan tomorrow morning. Morgan Stanley is, no, that's the 20th. Let me see when Goldman is. You got a bunch of banks coming out this week. Goldman is the 16th. Citigroup is going to be the 15th. We'll just stay with JP Morgan for a second. All these financials, by the way, are looking weak in an incredible way, not in a small way, too, which is just pretty wild. We put this on a daily basis, and what you're going to see is this. You have a high volume swing low October 15th. That's the benchmark, folks, in all these equities. It's the October 15th swing low. That's a magnet. It wants to grab it. That's where this thing wants to trade. That's the first part. Second part, as we get closer in, is this. The December swing low for JP Morgan is 58.11. We did volume there of there she is. We did volume out there of 20 million. Thus far today, guess what? We're going to do about 19 million. We've been pounding that low, folks, with volume. That sets up it's going to break the low and wants to get down into that lower level. What hasn't fallen apart yet is the XLF. And the financials, they're teetering right on it. If we go over and we just take a look at the XLF for a second, what you're going to see is that the XLF is on 34 million shares today. It's going into 36 million. The XLF is trading at 23.88. This is crucial to wrap your head around, folks, because when the financials break, the market comes apart. And, you know, we'll see how this shakes out. If you've been in front of a computer today, you know the bottom line is that it's fast, it's furious, it's all of the above. Dow Industrials right now basically flat. NASDAQ is down 7. S&Ps are off 12. Stay right there. We're coming right back.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrial's down 43. Get the NASDAQ off 16. S&P's off 7. And when we do a little price projection out here, folks, let me show you that what you have happening. So if we go to the SPY, everyone can deal with the SPY, the SPY. What you're looking at is this. SPY right now is at 201.89. You have the volume today, meaning you get expanded volume as you're coming into the swing point from January 6th. January 6th, we had done 209 million shares out here, and what we have now is that you're at 190 million, so we're going to end up doing a couple hundred million easy. That's the first part. The second part's much larger, though, folks, and what the second part is this, is that the break from December 16th is what this market is going after right now. Now, on December 16th, you had done 259 million shares. So what normally happens is this. When you're coming down to a swing point like that, if we went straight down to that swing point and you were there in, let's say, by tomorrow, that would be a problem. Well, that wouldn't be a problem. That would be a problem for the bears. The reason being is that move would be way too fast. Okay? You're down 0.84 today. The price spread we had on the SPYs today, as the Dow Industrials were huge. The SPY had traded to 205.48, down to a low of 200.51. That's a big price spread, big time. You're talking about $5 price spread here. So what does that mean? Well, it means if you're going to break down on the 16th, what you're going to do is that tomorrow, we're going to get into the bar from the 6th, and you'll go sideways. You'll move into it. Market will be volatile, but you still have a sideways to downwards move. You're going to be building some cause. That's Wednesday. Thursday, I expect the same thing. And then what does happen, folks, is that, let me just look at this for a second. So if we look at this, I believe what we have happening. Let me just see this for a second. Yeah, this is what's happening. So this is setting up pretty intensely. What you have happening is this. This Friday is option expiration. So option expiration, you have a chance to get big volume into the marketplace. And what I expect you're going to see here is that we're going to build cause. You're going to come into this area of the 197.86, and that's where this thing wants to blow apart. And, we'll see how it handles that number. But you're going to get, you'll get a good indication of how it's going to handle it, how we trade tomorrow. That's how this comes down. If we go over to Amazon, we take a look at Amazon. The reason I'm bringing up Amazon is that you had Citigroup up there pumping up Amazon all morning long. Bottom line, Amazon is not only going lower, folks. So Amazon has a high volume low at 284. They got it pumped up to 301. You're trading at 294 right now. This is a monster ABC structure on the way down. It's in big trouble. If we go look at Google for being one of the leaders, this stock is trading at 501. It's below the October 15th swing low of 518. It's off a high of 600. Google's going a lot lower, not a small amount lower. So there's big numbers below where we are trading right now. And, of course, the mother of all those numbers for the Dow Industrials is good old IBM. IBM is at 156, and IBM, has been doing some great financial engineering for quite a while. That financial engineering, bottom line, has caught up with it. We're at 156. My take is that IBM is on its way down to this 116 area. We go over to Apple. They sucked people in on the Apple deal out here today. They got Apple up to 112. It's trading at 110 right now. Apple's off its high of this 120 area. And, bottom line is that Apple wants to make this run down to the 99 area. The IBB has not fallen apart yet. It tested its high again out here today, failed. Bottom line, I suspect you're probably going to get another spike out of the IBB, though. When the IBB falls apart, folks, get out of the way for the NASDAQ 100. That's how this shakes out. The IBB right now is trading at 314. It got up to 322 today. You have volume of 2.3 million. You're going into 2 million, so that's saying, hey, you know what, that IBB, that the high of today can get tested once again. If we take a look at some of the equities inside it, you take a look at Gilead. Gilead is not only off its highs, it's off its highs pretty good. Gilead's at 97. The high out there was 116. REGN, these are high volatility stocks. REGN is at 405 right now. That high is 437. Bottom line is that also is building cause to get into lower price. Oil market. Now let's go look at the oil market. What we have with oil is just phenomenal. Oil market out here, we go to the futures market first. Oil's trading at 46.58, and what you have once again is this. You have a high volume swing low. You know, oil just can't hold price. You know, we'll see what type of cause oil maybe builds to get into that 32 area, but there's no doubt that this has been a one-way trade. You're talking about September 30th, oil was at $92. Now we're at 46. And, you know, what that does set up, unfortunately, for, you know, a lot of folks that are in that business, that sets up a lot of layoffs. And those layoffs inside the oil patch, folks, are not only happening, they're fast and furious. I got an email yesterday. You may have, you know, there's a geologist that I know really well. And the bottom line is that they were fast to cut. Well, what happens, just so you know, inside the oil patch also is this, is that they're used to fast expansions on the way down, and they're used to wipeouts. So what happens inside the oil patch is that they see something that this is this bad. They know immediately the money's not going to be spent for drilling, the money's not going to be spent for projects. And once the budget is done for the year, it's done, folks. And that's what's going on right now. This happened at the time of year when the budgets were being made. They had a chance to cut back the budgets. They cut back the budgets. So those states are going to be hurting. You know, and we will see whether, in fact, oil wants to bounce off these lows. At this particular point, you don't get a real good clue until you get down into those levels as to can oil bounce off of that level once again. This is a different downdraft to this oil than it was in 2008. This is Tom O'Brien. This is TFNN. You stay right there. Don't forget about the daily newsletter, folks. My daily newsletter, you can test drive it for a month, free. You get my book free, and you get a workshop free right at the front page of TFNN. It's only good this week. We'll be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
I'm doing great. You having a good day out there?
I'm having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by an unknown author. Expect the best. Believe something good is going to happen, and it usually will. Market-wise, let's take a look at it out here. We had the Dow Industrials close down 27, NASDAQ off 11, S&P's off 3.5, gold contract down $1.90, trading at $1,230 an ounce. Silver up 48 cents, trading at $17.04. Silver finally had wide price spread, accelerated volume going topside. Want to see another one, but that's a sign of strength that we needed inside the silver market. Copper got smacked. That was down 12 pennies at $2.60 a pound. Light sweet crude flat at $46.40. That also made a lower low. Has volume behind that. oil's going lower. King, 10-year bond. 10-year bond up 6 ticks at 129.08. 30-year bond down 4 ticks at 148.10. Both the 10-year and the 30-year rejected lower price, had lighter volume. Bottom line, bonds want higher price, lower yield, in a huge way, too. It's pretty amazing, folks, okay? The 10-year right now is yielding 1.903, and what that's set up to do is probably get down to about 1.7. This is going to be pretty amazing watching this whole thing shake out. King dollar. What do we have a king dollar? King dollar gets up to a price point of 92.63 today. Couldn't hold price. We're at 92.47. 92.53 is the benchmark, folks. What 92.53 is the high of 2005. It took 9 years and 2 months to get up and get into that high. Bottom line, I expect you're going to see King Dollar continue to back off those highs. It's been testing in the last few days. That's what's throwing some monster volatility inside this market. When we take a look at the Dow Industrials, bottom line, I'm sure it's a shocker out there for many folks. Dow Industrials had a high out here today of 923, 17,923, and a low of 17,640. You're at 17,613, 17,498 rather. So the price spread was pretty amazing out here. You had a price spread of 425 points inside the Dow. You could expect more of that. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay. So we start with the cash S&P. This is what you have happening. And it's pretty intense. Market couldn't hold price. You have high volume on the way down. Right now, your cash S&P is at 2023. We did volume out here of 822 million shares versus 778. The first level you're going to see that the S&P wants to go after is this 1992. And what I expect you're going to see is this. It's Tuesday. We have option expiration this Friday. You're going to see it get into, first off, the December swing low. That December swing low is the 1992. Then you'll build a bit of cause, maybe day and a half. And option expiration day, we're going to be going after this 1973 area. That's the short-term basis, folks. The longer term is this high volume swing low that we have out here in the S&P at 1820. Now, the thing that's amazing is this. You have many of the equities inside this market that have already cracked into that October 15th high volume swing low. Where the S&P, we're still high. I mean, we're still at 2021. Dow Industrials. What do we have with the Dow Industrials? Dow Industrials gave it up in spades in an extraordinary way. We take a look at the Dow Industrials. What you had out here today from high to low, as we said, was 500 points. Taking the wind out of the Dow Industrials today, you had DuPont down 127, Chevron was off 168, Pfizer was down 33, Nike was down 85. You can see what happened out here. You had a huge, all those equities were up in a big way. In fact, at one point in the Dow Industrials, there wasn't one stock that was in the red. That was this morning. Didn't last long. The NASDAQ Composite. What do we have inside the composite? Inside the composite, folks, you have the same phenomena happening. The composite today gets up to 64.77. You're at 63.63 right now. Monster volume, 2.1 billion shares. The composite could not hold the January 5th highs. So that's what it's trying to do. And that's what we had a vicious downdraft on January 5th. We went from 64.66 down to 63. Bottom line, that's where we're at. NASDAQ Composite wants to do the exact same type of setup, meaning it's going to build cause, first off to get down to the December swing lows. Then what I expect you're going to see is the October swing lows. That's going to take a bit, but bottom line, what is still hanging out there in the composite also is a high volume swing low October 15th. If I bring you over to the SPY and you want to see how clear this is, we take a look at the SPY. This is what you have. The SPY out here today did volume of 208 million shares. The volume on the 6th is 209 million. That's December 6th. That low is 198.85. We're at 202.08. We're going after that 198.85, and I expect you're going to see that more than likely get hit tomorrow. You'll build some cars, then what are we going to do? We're going to go after the December 16th swing low. That's 197.84. Now, what you're going to need at that swing low, folks, is an expansion of volume because we have 259 million shares there. Does it end there? No. Why? Because you're already inside the lower range, folks. The lower rate, well, if we get down to the December 16th swing low, the lower range inside the SPY is once you get back inside 201.85. What's hanging out there in a big way is 181.92. That's the October 15th swing low. If you want to look at the QQQ, same type of setup inside the QQQ. What we have out here today, we're at 101.52. We did 56 million shares out here today. You're going into the first swing low, has 66 million shares. The December swing low has 65. You'll build a little cause. What's sticking out like a sore thumb still is 90.24. That 90.24 is the October 15th swing low. And if you want to see a couple high volume stocks that just have taken that apart, well, go to Google. Google already took it apart. You know, the October 15th swing low on Google is $518. It's trading at 501. We'll go over to Amazon. We take a look at Amazon. Amazon's making its way down to that level. Amazon's at 294 right now. Your high volume swing low out here is 284. GoPro, GPRO. What do we have with GoPro? You get a confirmed ABC structure in the way down. GoPro today, big volume on the way down. What we did is this. You did volume of 15 million shares. You blew away the swing point that had 6 million shares. This is, you know, GoPro, number one, not only went higher, it went dramatically higher. You know, GoPro went nonstop from $38 up to the $100 level. We're at 49. Where's it going? Guess what? We're going down to 40 bucks. And like a heartbeat. It's pretty intense. There's no doubt about it. Gold contract. What do we have with gold? Gold contract out here gets into its swing point, has some juice in the swing point. Last time we were up at these levels, you did, let's see, I believe we did 24,000 contracts the last time we were up here. Today we did 160. We were doing... Okay, we did... We're going to need more volume. That's what we did. Last time we did 240,000 contracts, 241,000 contracts at 1238.90. Today you get to a price point, 1244. You get an expansion of volume, you're going to need more. I suspect what you're going to see here, you're going to build a big cause, jump over it. Why? Because if we go over to the GLD and we take a look at the GLD, what you're going to see is this. Last time we were up here, you did volume of 10 million shares. Today we did 7.8. Not bad, but what you have, you're hanging at those highs, folks. The XAU and the HUI had the volume. And this is what the XAU and the HUI did. The XAU and the HUI went into the swing point. It couldn't hold price, but when you go into a swing point with volume, bottom line, it wants to go higher. And King Dollar, what about King Dollar? King Dollar, folks, couldn't handle its high, backed off. You can expect lower King Dollar. You stay right there, folks. This is Tom O'Brien. This is TFNN. We'll be coming right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. The Dow finished down at 27. NASDAQ off 11. S&P's off 6.5. And if we go back over to GoPro for a second, I want to show you something, folks, okay? Because this is pretty wild. GPRO. So what you have with GoPro is this. On a daily basis, takes out the B point, takes it out with monster volume. If we switch this and we're going to a weekly, what you're going to see is that it's possible that this is just one monster ABC structure on the way down that is pretty intense, because it will take it back to $24. Right now, you're at $49. And the thing that would be amazing about that, of course, is that GoPro went public at $24. That's what's insane, okay? Bottom line is it never traded there because it opened dramatically higher. But the way this is set up right now, it's taken out its B point on a weekly basis, and it has and will take that out with volume. We're only on Tuesday. Thus far, we've already done 20 million shares, actually more than 20 million shares out here. We've done 20 million thus far, and it only has to do 24 million. So get 3 more days to do 4 million shares and stay under the price point of 53.77. And right now you're at 49.87. So it's a big number. CSX. CSX just come out with numbers. We take a look at CSX. CSX, of course, is the large railroad. The low for the year for the last 12 months is 25. The high is 37. Right now, it closed out at 33.55, and it's trading at 33.77. Numbers go like this with CSX, and some of these railroads are going to get hit in a big way too. Okay, so let's see. Their estimate was 49 cents. They made 49 cents. That is the bottom line. Top line, the estimate was $3.18 billion. They made 3.2. So what they do have, they made their numbers. What you will see, however, is that we bring this on a daily basis. You're going to see that CSX is off its high of 37. You came off that high with volume on the way down, and the last time that it had any volume on the way up was right where we are right now. What CSX also has, and this is what's really dangerous with all these railroads, when this came off the bottom of $29, you get a gap that's wide open. That gap that's wide open, folks, wants to get hit. That's how this is setting up at this particular point. So you can expect that gap's going to get hit. Let's go back over to the dollar, because the dollar, folks, to me, is going to be dictating exactly how this market wants to trade. This is a long-term change of trend inside the dollar. Now the dollar is still at highs, so you can make the point that, hey, what are you talking about? We've been at these highs for 5 days, and we have. What you have is this, is that the dollar has been going after the highs that were generated. If we take a look at the continuous contract, it was going after the highs that were generated, going all the way back out there in 2005. And that's a long time in order to go up and reach the highs in general, okay? Bottom line, I suspect you're going to get that pullback. Why am I expecting that? Because of the way that as the dollar has been up at these highs, it hasn't been able to get over them, number one. That's not the big deal, though. Where the big deal comes in is the aspect that gold and silver has not backed off with that dollar at highs. It's a big one. If we go over to the silver market today, which is pretty amazing, silver finally had a sign of strength. What we had inside the silver market out here today, and we've been basically, looking for this because gold was telling us that it wants to go higher. Silver, however, has not been moving. So silver out here today, we did 25,000 contracts. It's not bad. It took out a swing point that had 47,000, so you can see volume-wise it needs a lot more. Silver now will make that run for $17.35. We hit $17.07 out here today, and the big number really has to do with the $17.58. What you do have happening is that you get a couple silver stocks that are running pretty good. If we look at the SLW, I like how that little baby's running. The SLW, which is silver wheat, and that's the largest silver trader in the world, that has it all, folks, has it all. Silver Wheaton did 6.7 million shares today, took out a swing points that confirmed ABC structure on the way up. It's a nice setup. Don't forget, folks, if you'd like to test drive my daily newsletter, this is a great time to do it. You can get a month of the daily newsletter. Normally, that's only 2 weeks, but we have a special that's going on. First time we ever did this. It's this week only. You get a copy of my book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. You get that absolutely free if you test drive the newsletter. You also get, on January 21st, I'm going to do a 1-hour workshop. All of that is free. Check it out on the front page of TFNN. Let's go to Jim in Spokane, Washington. Hey, Jim, what's going on?
Not too much, Tom. How you doing?
I'm doing great, man. Thanks for calling. Thanks for holding. So what's the weather like in Spokane these days?
Well, let's see, it's overcast. We got just a little bit of snow on the ground, and it's about 30 degrees so
30?
far.
That's not bad. 30's pretty good.
Yeah, not bad. Not a whole lot of snow, so that's a good thing.
Good, man. So what are we going to look at today?
Well, I want to look at UNG.
UNG. So UNG, folks, is the ETF structure for natural gas. And let's take a look at this baby. So do you own this? Are we looking to buy it? What are we doing here?
Yeah, I don't own it yet. Looking to get in it.
Okay, so the UNG, folks, has gone from a price point of $23 down to $14.94. And this move has been pretty dramatic in spite of the bottom line is that you have the winter. But what we also have is what? We have an oil market that's falling apart. So it's like, okay, where's the competition? If we take a look at the actual futures, I get the futures up here, natural gas, and you can see the future market has gone from 450, and right now you're at 293. Now, it had movement out here today. There's no doubt. You know, the natural gas market did. The natural gas, folks, and if you've never traded natural gas, bottom line, make sure you know what you're doing because natural gas is highly volatile. When you get it right, great. We can have a field day. When you get it wrong, it's a tough market. I wouldn't be buying this until you had some kind of sign of strength. You know, this natural gas market hasn't done anything but go down just like oil.
Okay.
You know, and when you take a look at it, the natural gas market in general is most of the time more brutal than oil. What it hasn't done yet, it hasn't tested yet its 2012 low, which is 192. You know, and the high of that low is 232. You know, we got down yesterday to 278. But I wouldn't bite yet. There's really nothing here, man. You know, if we just go into UNG and we go back to the UNG, folks, is the gas fund. What you'll see there, it's kind of the same setup. If I put this back and we'll put this on a monthly and take a look at it, yeah, you can see there's nothing here, man.
Okay.
Okay, man. Have a great one. Have a safe one.
All right. Thanks, Tom.
Okay, man. Bye-bye. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the markets, folks, you had the Dow finished down 27, NASDAQ off 11, S&Ps are off 6.5. You stay right there. We'll come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials finished down 27. You get the NASDAQ guy down, finished down 11. S&P's off 5.5. I'm going to go over to GoPro for another second here. Check this out. This is going to be pretty intense watching this shakeout, folks. So GoPro right now, get this on a daily again. GoPro's trading at $49.87. Now, if you understand how an ABC structure works on the way down, we have a daily setup. The A point on the daily is $80.61. That was generated November 28th. Straight line move down to 53. So you get approximately $17. The C point is 70. So what that sets up is 70, 80, $27 rather. Yeah, I knew that was wrong. 27. So it's a 27-point down. What that sets up is 7 to 50. 3, 6, yeah, $47, right? So right now we have 49. That's on the daily. On the weekly, it's a larger ABC structure on the way down. Now, the ABC structures go a 1-to-1, 1 to 0.382, 1 to 650, and 618. So we'll see whether they get an extension or not. But check this out. This is what's pretty intense. It's January 13th, okay? Well, what we have is this, is that the founder of GoPro, Woodman, will earn 4.5 million shares that he received in a grant in June. This guy is basically cleaned up. And what has also happened is that the broker-dealer community, the banking community, allowed him to sell shares prior to everyone else selling them. So the guy is cleaned up, and you can see that we're at $49. You've already come off the high of 96. So he's been cashing in a huge way. But this one here is going to be interesting watching, because this is what has to happen. That GoPro cannot get less than $44.24 before January 23rd. So you have 10 days. Out of those 10 days, so that, I think that's is 10 days next Friday? Might be. And that would get him all 4.5 million shares. The way this grant is specified is that the grant specified that he would stand to collect all the shares if the company stock stayed above that price for any 30-day period starting December 23rd. At today's price, that grant is worth $225 million. So what's going to be amazing here is that if, in fact, he can hold it up or the company can hold it up over there. You talk about a trip. Now, the way this is set up right now, it's saying to me, folks, that that is not going to happen. You know, today you went from a price point of 57 down to 48. Huge expansion of volume. The way that this is set up at this particular point, GoPro, I think without, yeah, it's going to be a close call. It's going to be close. 48, we're at 49.87. So 48 has a little support. It breaks 48, and see you later. You're at 37. Now that's on the daily. The weekly, of course, the weekly is an ABC structure that already has the volume that could bring this down to $24. So that is an absolute amazing number, folks. Okay, and we'll see whether we get there. He's definitely figured out how to basically suck the most amount of money out of that company in an extraordinary way. But it looks to me like that's where this baby is going, meaning down into those levels. Now, if we go over to the XLF, the financials, the banks are going to be coming out with numbers starting this week, starting tomorrow, actually. And what you can expect, I expect these numbers are not going to happen in a good way. Why? The XLF is trading at right now at 23.60.84. The swing point's 23.68. That swing point, we had 36 million shares traded out here, and the XLF is coming into that swing point with expanded volume. We did 37 million shares today versus the 36 million at the swing point. When you come into that swing with volume, XLF wants to run down to this $21.55 mark. Let's go to John in Winchester. Hey, John, what's going on?
Hey, Tom, not too much. How are you?
I'm doing great, man. You having a good day out there?
It's probably 19.
Man, you guys have it's been so cold in Boston this year, man, right?
It's the worst I can remember as far as the cold.
Yeah, it's pretty intense. So,
go ahead.
You want to look at Texas Instruments?
Please.
Okay, so you get Texas Instruments. Of course, that's a huge semiconductor design manufacturing company. The low is 40, the high is 55. Okay, so we did 4.9 million shares today. You're going into a swing low at 5.4. And you do have a high volume swing low at $44.30. Now, this comes out with numbers on the 26th, John, but it is building cars for lower price, man.
Yeah, it seems like today I had a question on. I watched the market from like 12 to 1 on my phone. I literally saw it go from up 300 down
100. Yeah,
down 100 like that. I'm like, was there a high tick reading?
There was. Oh, great question. So check this out, folks. Okay, now. We had a minus 1450, I believe. Let me see. 1 second. Let me get this. I think it was a minus 1452. It was a big number.
1450? Wow,
yeah, which is minus 1421 we got. And that is a big number, folks. Okay, here it is. TICK. Now, what happens at lows is this, though. What you have to get in order to basically get a bounce going is two separate high volume tick readings. Then you have to get a rejection of price simultaneously. You know, but that was a very high tick reading. And what that, folks, is that is high fear coming in the marketplace. That's how that shakes out. And what does end up happening is that nothing goes down forever, nothing goes up forever. But when you're looking at this tick reading, bottom line, you know, you get a couple. When we get into a bottom, we'll get a couple of these tick readings. You get a rejection of lower price, then you get a bounce, and on that bounce, you'll be able to see is this just a bounce in a bear market. My take right now is that you not only have a bear market, but you get a nasty bear market, because what you do have, folks, is the way this has been trading. Bear markets have fast counter trend bounces, and they give it up, and they give it up out of nowhere. I'm sure there's going to be many folks that come home tonight and say, what happened? Just as you were, you know, looking at your phone, John, the market's up 300 points, and all of a sudden, in a heartbeat, it's down 100 points. That's how bear markets move. But what you do get out of it also is that every bounce gets sold off. And, you know, the phenomena we have right now, we've had for the past 5.5 years, is that every person that has bought a dip has got rewarded. Yep. So, and what my point is this, folks, is that makes it more dangerous because of the fact the rewarding aspect has been out there. So this dip buying will continue for a while, you know, because when you come back 300 points, guess what? You come back 300 points. Because see, what we had out here today. Now this is pretty cool. You had a minus 1421, but then you also had a plus 1251. You don't get plus 1251s, folks. So at plus 1251, let me just see when the plus 1251 came across at. Oh, look at that. That's amazing. Oh, so check this out, folks. This is pretty intense. Yeah, this bear is going to be vicious. So the plus 1251 came across at 3:30 this afternoon. So you had two different things happening there. That, I suspect, was a little short covering because people made good money. But what it also was is people said, oh, no, I got to buy the dip. I got to buy the dip. I got to buy the dip right now. And that's a dangerous phenomenon, you know, because, wow. Yeah, I know. Pretty wild.
Now, when it's plus 1251, that means everyone's buying pretty much and covering their shots?
That's right. Or they're just buying. It doesn't have to be covering the shots. What that very well could be, they get the bounce going. Listen, there's plenty of people that have just been sitting there and saying, okay, here it goes, it's going to bounce, I got to buy it. But I can tell you this, the plus 1251 negates the minus 1451. What happens if you get a real bounce? You're not going to get a plus tick reading at all because everyone's so scared. You get two monster down ticks within 3 or 4 days. You get a rejection of price, and they won't come back in the market for 3 or 4 more days after it's going up. Not like that just happened right now. Have a great one. Have a safe one. You stay right there, folks. We'll come right back. Dow down to 27, NASDAQ off 11, S&P's off 5.5.
Grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. Dow finished down 27, the Nasdaq off 11, S&P's off 4. And don't forget, folks, if you'd like to get that special that we're doing until this Sunday, you can get my market insights for 1 month absolutely free. You get the Art of Timing the Trade, an $88 value, free for test driving it. You also will be in the workshop January 21st. All the details on the front page of TFNN.com. Now, let's go over, we're going to get a lot of numbers that are coming out. They're going to be coming out fast, furious, all of the above. And we take a look at one of the biggest ones, folks, I suspect, we are going to have is J.P. Morgan. And the reason being, of course, okay, J.P. Morgan, huge bank, number one, well-respected bank. And good old J.P. Morgan is coming out tomorrow morning at 0700. So J.P. Morgan is going to be the number inside the financials for tomorrow. If we take a look at J.P. Morgan, what we have is this. We did 21 million shares out here today. Your last swing point had 20 million. J.P. Morgan is screaming that's going to break the swing point. That's going to be pretty intense, folks, because what you do have inside J.P. Morgan is the high volume swing low, but what you also have is J.P. Morgan is trading at the same level it was trading at November of 2013. You know, some of these financials, they had the nice run off the lows. However, they've been consolidating for huge periods of time. And when I take a look at J.P. Morgan, we're at 58. And what is game on J.P. Morgan after this high volume low of 54 is all the way back to a price point of 37. So we'll see how this shakes out in the morning. But you're going to know very quickly in the morning, because that's 0700 hours that's going to come out at. If we take a look at this and we put this, I put this on a monthly basis for you. First I'll put it on a weekly. So what you're going to see on the weekly, it's pretty clean, that it's already inside its lower range. You get that 52 that's hanging out there. The high volume swing low is 54. We put this back on a monthly range. What you're going to see is what's hanging out there. Well, I don't think it's going to go down to 21, but actually, you know what? This is pretty intense. Let me put this back up again. I got to see this. If you put this on a monthly basis, this would be bizarre. Oh, man. Okay, check it out. This is intense. Okay, J.P. Morgan. Man, what's coming down the pike? Something's coming down the pike that's not good here, folks. Okay. J.P. Morgan has a high volume low at the 09 levels. Now, I can't even picture this going to 30 right now, but guess what? $29.80 wants to get tested. So how do you deal with something like that? When you're talking about high volume lows, and you're talking about a banking structure, and we're talking about it's at $58, you know, you don't have to get, if you own it, don't get paranoid that it's going to go there, number one. Put a stop in. What you do want to do is that you're going to want to not turn your back on it. You're going to watch this at swing points, because what you have is this. The probability goes higher as you go lower, and it's just not lower in price. If you go lower in price, you take a swing point out with lighter volume, your probability of going down there gets dramatically lower. If you take a swing point out on volume, meaning in the first swing point on J.P. Morgan on volume would be, I wouldn't count well, it's not that I wouldn't count it, but I'm expecting it to get down to October 15th. But if you take out this $54.26 with volume of J.P. Morgan Chase, let me tell you something, folks, clear the decks. Because I actually hadn't seen this, that is laying out there. Let me pull this back a little bit further, actually. So that's a 10-year chart. It's laying out there in spades. It's not good. And what you have is this. Once you get back inside $53.25, what you have is that you're in the lower range. You get back inside $53.25, that brings the game higher, that you can actually get to the highs of the lows. And I'm not bringing it to the lows. I'm bringing it to the highs of the lows. And it's like, okay, what is out there that can bring it down? You know, we'll find out what is out there. And you know, it's possible. It's possible that what we have is that you have a currency dislocation. That would be something that would be problematic. You know, if we go over and take a look at Tesla, folks, Tesla out here closed at 204, and right now this is trading out at 193. What's happening with Tesla is this. Let's see. What is well, something's happening with Tesla. Bottom line is that that's trading down $10 right now. We put this on a 10-minute basis, and you're going to see this is getting hit hard after hours. So we just went from 203, we're at 192, and 192 on Tesla is going after it's December 17th swing point. Okay, so watch this. This is pretty wild as we're talking. I love doing these programs live when the market's open too, because what you have is this. See, the S&P itself wants to get down to this December 16th level. And we were just talking about the financials, and more than likely you're going to see JP Morgan bring it down there. Well, Tesla's already bringing it down there. You know, Tesla has gone from a price point of, what, $291. Right now, you're at, well, yeah, we're down $100. Holy cow. Yeah, you're at 193. The 193 level is bringing you into the December 17th swing low of 192.65. Bottom line, that's saying that wants to blow that away. And more than likely, what you also have now is you have another ABC structure down. Your A point is 259. Your B is 192. So you got, what, 8, and you got a 67 A to B. That's going to bring it into 170. You know, so there's some big destruction that's happening out here on a continual basis, meaning not just in the indices. The indices are still and still have stayed pretty high. Individual stocks have gone a lot lower, not a small amount lower. And I expect what you're going to see is the S&P, the Dow, the NASDAQ, the small caps, they're all going the same way. You know, don't forget at TFNN, folks, we do 10 hours of live programming every trading day. We start at 8 o'clock in the morning. Go from 8 to 6 o'clock. Get all that programming right on your cell phone, tfnn.mobi. Can you also get Tiger TV? The way you're dealing with Tiger TV, just go to tfnn.com, hit the TV, you get the audio, you get the video. Our man, Mr. John Logan, kicks us off at 8 o'clock in the morning, Eastern Standard Time. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. We look forward to speaking to you right here tomorrow morning. Go get them, folks.